Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So I'm gonna have the earnings on the radar video for you tomorrow. Okay. Today, just want to kind of preface that video with just some things I'm looking at, or maybe some changes I'm making ahead of this earnings season, because things basically get going tomorrow with the first of the big banks reporting, and I'm sure if you are familiar with the way we operate our earning strategies, or maybe you've been looking at getting more active in earnings trading, uh, well, I'm sure then the case is that you kind of know that it's already going to be a pretty unusual quarter, just after the way things have really played out over the past month, just in terms of like the stock action, but also like just the economy, the individual businesses. So much going on right now. Um, so a lot of the typical go-to things that I'm doing or looking for or screening for into earnings this quarter, really going to have to change that a bit, adapt to like the current market. All right, I mean it's just maybe next quarter it'll be back to things, more of like a normal environment into earnings. But for right now, need to adapt, right? So just wanted to like throw out some things, or some ideas, or just some factors I'm kind of weighing as we get into earnings, and the different names I'm going to be trying to go after, right? So one of the big things we've been noticing recently is that there's been a lot of companies either giving early guidance or suspending guidance, right? And that typically would keep me away from a lot, right? Like if a company gives preliminary guidance, I'm typically avoiding it. Um, to be honest, I'm still going to try to be like very, very, very selective if I'm looking at like a stock or a pattern into earnings for a company that already gave guidance. It's going to have to be, a very compelling setup for me to do it. So I'm still really trying to screen for either a stock that hasn't given guidance, or maybe like a sector where there really hasn't been much guidance, and really many like updates. That's why I think financials still kind of interesting. We haven't really gotten a lot of like major updates out of like the bigger banks yet. So I think that this area in particular could be one of like the sectors that still has a decent amount of volatility, because I mean expectations still kind of like like all over the map a little bit. Um, so that's one thing, right? Like really trying to screen for like those companies, or those maybe like those little sectors where there hasn't really been any like financial guidance update yet, because there could still be some volatility or higher volatility associated with those. All right. Second, uh, big bounces, or stock. So like stocks that have had really big bounces, like disproportionate to like the overall market, and then stocks that have had no bounces, right? So lagging materially to the overall market. Those are going to be the ones where I'm a little bit more cautious on. Okay. Um, and the reason is that expectations may have gotten too one-sided, right? So if things are close to their 52-week high, then obviously people probably quite bullish. If things are close to their 52-week low, then again, looking at it, from the opposite side, then people are probably quite bearish, right? So um, those could just, when you get those one-sided expectations, it could lead to moves in the opposite direction. So for in terms of volatility strategies, maybe like not to entertaining those with volatility strategies. Maybe looking at something more like directional, or looking for possible reversals. Right. The stocks that are more in the middle, right? Again, like XLF, kind of in the middle of its range. Those to me slightly more interesting, because maybe more uncertainty. Right. You guys still got some people that are bullish, still got some people that are bearish. More mixed expectations could lead to more volatility. Right. That's my logic right now. But I mean, again, you are seeing, so like the cruise lines still sitting around their 52-week low, whereas you have some tech names which are around their 52-week high, right? So like Costco was like a good example. It's not a tech name, but it was retail, right? They had comps last week, expectations were very, 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 very high. They didn't come in as high, and the thing rolled over a bit, right? So that's what I'm talking about. When expectations are too high or potentially too low, it can lead to like some like tough trading. All right. And now like the third thing is that I really a lot of times when it comes to earnings, I like to do or be on the hunt for volatility strategies, right? Because I think one of like the great things about options trading is that it allows you to play both directions at once, right? So it's not necessarily picking whether it's going to go up on a beat or down on a miss. It's basically finding the pattern where you have more confidence that it's just going to move more than what's priced in, right? That's why I love volatility strategies. It's not trying to be right in the direction. It's just trying to gauge which pattern is going to lead to a bigger than expected move, right? Whether that's up or down. Now, right now, option pricing is still really high because the VIX is still pretty high, right? We're still in like a 40 handle in the VIX. So option pricing in general is elevated. We're still getting pretty wide ranges. So that's going to make it tougher to see those really exceptionally large moves because the option pricing is already high, right? So even though I don't like it, I have to adapt. And this might be a quarter where we have to like look at more directional focused strategies, right? So maybe more bullish strategies or maybe just more bearish strategies, right? But those to me are higher risk. And that means that the overall debit that I want to commit to those is probably going to be lower, right? So these are going to be more speculative ideas where it's more directional based versus what I typically like is more volatility strategy based, right? So like straddles, strangles, that's really like my bread and butter when it comes to earnings. But because of the option pricing, I might have to look to go more to the directional side. So whether it's straight bullish, straight bearish, and then to me, like those are more speculative. So like those are the ones where I'm probably going to want lower overall risk. All right. So just wanted to kind of lay that out before we get into earnings. Again, keep an eye out. Tomorrow I'll have the earnings on the radar video for you. If you like these videos and you're looking for more information on option trade ideas, especially as we get into earnings season, or if you're looking for more information on options education, please follow up with the link in the description of the video for more information on options to play. All right. I hope you guys continue to stay safe, stay healthy, have a great night, and I will talk to you all tomorrow.